Hey, what's going on, everybody? Welcome to your weekend briefing for the week starting April 17th. In today's show, we're going to look at the first busy week of earnings season. We'll take a quick look at some important economic reports in a week that really focuses on housing. We'll talk really quickly about some Fed speak coming this week, and we've got lots of charts to look at to get a better feel for the markets. We'll look at how some of the setups we've been playing are doing and if we're making any money on those or not. And we've got a few new interesting setups to look at, including Builders First and Ferrari. So by the way, make sure you smash that like button. We put a lot of work in these videos and it really helps us out. And if you're wondering why we do these videos, we like to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and live mentor sessions. So check out the link below in the Discord or in the description if you're interested, and come join us in the Discord. We'd love to have you there. Here's a quick little disclaimer, and let's get started by looking at earnings we've got coming up this week. Okay, we start the week Monday morning before the open with Charles Schwab, and as you know, this is one of the banks that's been a little bit troubled. Got knocked down really hard and at the beginning of the banking crisis, and has not been able to pick itself up off the mat. So this will be really interesting to watch. Could really set the tone for the week, I think. And then after the close on Monday, we've got we get into a lot of the regional banks coming through the week here, and starting with like Pinnacle and First Bank, some of the other smaller banks you can see down here on Monday after the close. On Tuesday before the open, we have a couple of big banks. I got Bank of America and Goldman Sachs. Obviously, Goldman Sachs is going to be, both of these are going to be very closely watched. J&J, Johnson & Johnson will be closely watched. And Lockheed Martin, big aerospace defense company. Another really interesting one there. Tuesday after the close, it's Netflix. Everybody's going to be watching this one. This has been kind of chopping around sideways for a little while. We'll take a look at the chart later, but I think it's kind of setting itself up for a big move on these earnings. We've got United Airlines coming up after the close as well on Tuesday. And I've highlighted First Horizon National Corp. Now that's First Horizon Bank. You may have heard about them because they're another one of the banks that are sort of at the center of this banking crisis. If they're on the short list of banks that might fail. We're watching that one closely. Wednesday before the open, ASML, you might not know this company, but they are the company that builds the machines that build semiconductor chips. Important company for the semiconductor industry, and semiconductors have been kind of languishing a little bit lately. Haven't really participated when tech was strong and rallying. So it'll be interesting to see if that changes, if anything changes here with ASML reporting. We have Morgan Stanley before the open on Wednesday as well. After the close on Wednesday, Tesla, another really big, closely watched company. I'm sure we'll all be interested to see what goes on there. And Lam Research after the close on Wednesday, another semiconductor company. Before the open, Taiwan Semiconductor. So you can see we've got, if semiconductors are going to do anything, they're going to do it this week, I would say. American Express on Thursday as well, AT&T, Rite Aid. I've highlighted Dr. Horton down here because we've got such a big week for housing market data. And also one of our plays, so Dr. Horton, if you don't know, is a home builder. And one of our plays is related to the home building industry. So we'll look at that. We'll look at that nice setup a little later on. Thursday after the close. Not a ton of interesting stuff. You can see there's a lot of smaller banks. And CXX is a railroad company. We haven't seen one of these in a while. And because, it's in the transportation, the Dow Transports Index, this could be important. On Friday before the open, Procter & Gamble. Also, I highlighted Freeport-McMoRan here because copper may be getting interesting again. All right. let's move on to our economic reports this week. So on Monday, Empire State Manufacturing Index and the NAHB Housing Market Index, the first of much housing data to come. Tuesday, building permits and housing starts. Wednesday, nothing. Unusually quiet on Wednesday for economic reports. Thursday, existing home sales, and as always, unemployment claims. And on Friday, flash manufacturing PMI and flash services PMI. So that is the most interesting economic data coming this week. And of course, all week long, lots and lots of Fed speak. They're going to be going into their quiet period shortly. I think the week after this, prior to the FOMC meeting, which is in the first week of May. So there's a quiet period where they can't go out and yap. So if they got to get their yapping out of their system. So they're going to be doing that, a lot of that this week, and a little bit of that, at the beginning of next week. So if they've got anything to tell us, they're going to be telling us this week. And of course, as you know, I mean, that can really move markets and can surprise markets. So obviously something to watch out for. All right, we're going to be taking a look at the markets here. We're going to start with major indices, international markets, important commodities, sectors, setups we're playing, and new setups we intend to play. I think we've got some interesting ones this week, and if the market behaves, I think it's going to be a really fun week for some of these setups. All right, let's start right here with our short-term market regime tracker. We are tracking the strength of the trend, if there is even a trend. And let me know what you think about this in the comments. It's a new thing we're trying out here, but this is basically an objective measure of short-term trendiness. We look back, 1 to 3 weeks or so, just to see the strength of the trend. And as you can see, we are right now at a 4. We're sort of in this bullish chop area. Last weekend, we were at a 6, so we've come down a bit. And when we take a look at the chart of the indices, you'll see why we've kind of sort of moved down away from, to strong trend into just kind of choppy, but still bullish. So that's where we're sitting with that right now. Let's take a look at the SPY. And you can see here in the SPY, so we'll take a longer term look. We had been in a downtrend, and we are now really consolidating inside a range, back and forth, and we're up near the top of that range at the moment. But looking healthy, there's nothing unhealthy here, and if anything, we're pausing nicely after a nice leg up. And that's why we're still, on our trend meter there, still in the bullish area, of course, because we're still in an uptrend. It's just that we've been choppy now for a little choppy for about a week and a half. But as you can see, still even within this chop, we are sloping upward. It's supporting really nicely on that 10-day moving average. And supporting really nicely above this major support resistance level, well above the trend line. So, no issues here other than, Friday we had a little bit of a red day, but we did recover nicely intraday. And we did stall out, though, right at this resistance level and just before all these gaps and stuff that are yet to be filled. I think this is fine. I see nothing wrong with this price action, and I think that this sets us up for another leg. And that next leg would start with probably fairly quick moves through these gap zones up into this 428 area. 420 might be a problem just because, it's 420. It's a number that people are going to think there might be a problem at, and Elon will probably come out and tweet about, I wonder if the market will make it through 420. Who knows? Do what Elon does. So let's see. That's the first spot I'd watch for. But if we get through 420, I think 428 is easy after that. So that's our SPY. Take a look at the Qs. We see much the same thing. Not quite as strong. Underperforming the S&P 500 just ever so slightly over the last week and a half or so. But hanging around the support resistance in that gap area just really seems to be waiting for a reason to go higher. Now, I should have mentioned actually with the SPY too, volume's a little light. You can see this green line here is the 50-day moving average of volume, and you can see that we have been below that for, you know, a few weeks now. So, you know, it's hard to trust moves when the volume is light. However, if we look back to when the volume was heavier, those moves were up to the upside. So, yeah, volume's a tiny bit of a concern, but not too much. Again, like I said, this looks like a market that is just waiting for a catalyst so that it can break to the upside. And we'll look at the weakest of all the indices, which is IWM, of course. And that had a nasty down day, but still in a range above this very short-term trend line. And again, kind of looking ready to break out here, but we've got a bunch of moving averages overhead. If there's going to be weakness, I expect to see it here in IWM, especially with all these smaller bank earnings coming up over the next week or two. All right, let's take a look at the volatility index. Look at this. We have broken down through a level we have been unable to get down through in quite some time. And if we roll this chart back, look where we are here at 17. We've got to go all the way back to the beginning of January of 2022 to get back to where we saw levels this low. So this is really quite interesting. And this is another one of the reasons I'm fairly bullish and expecting to see a break in the indices to the upside. Now, the flip side of this is maybe this is just saying, hey, this market is way too complacent. You know, the bears could come in and shock this market back to reality. And that's definitely a concern. But for now, the signals are pointing bullish. TNX, the 10-year yield, and if there's another sign that kind of says, hey, you know, better be careful here, it's the way this 10-year yield has come up over the last week and a half or so. And you can see we made a pretty decent move up there on Friday, you know, when the markets were a little bit weak. This looks like it wants to go higher as well. So it's hard to imagine this going much higher if the markets are also going to go higher. So we'll have to see how. So this is a little bit divergent to the bullish case here. Let's take a look at our dollar index. Now, this is a weekly chart of the dollar index. I brought up the weekly first because I wanted to remind you about this head and shoulders top pattern. And remember, look how far back this uptrend goes. Beautiful head and shoulders top here on the weekly chart. Pointed this out last week. We had a little poke below, but no major failure yet. Let's move over to the daily chart, zoom in a little bit here. You can see we had a bullish engulfing candle on Friday, which would suggest that this dollar index continues higher next week. But it is just a one-day candle, and it is right on that support level, which is the neckline of that head and shoulders top. So not too surprised to see a bounce there, but given the downtrend this is in, I wouldn't expect much of a bounce either. I mean, maybe this comes up to the 21-day moving average like it has before and then rolls over again, and then we get a break through that neckline. So I think, yeah, any rally here in the dollar is probably short-lived. Okay, where do I want to go next? Oh, let's go over to our dollar cost averaging system. And this is on the SPY, the S&P 500, and you can see all systems go here. If you were dollar cost averaging into indices and SPY specifically, keep right on doing that dollar cost averaging on your schedule. Let's take a look at the Qs. We'll see that those are really green as well. Looking nice and strong here on these weekly charts. IWM, of course, is still red. Even on the weekly chart, looking like a bit of a bear flag here and right below those moving averages. So the system is saying don't dollar cost average just yet. We've got another probably week or two before this MACD can cross up. Even if we start going up here, this MACD will probably take a week or two to cross up. So, given the other indices, if the other indices are going up, this probably will turn up. And if you really want to aggressively dollar cost average into smaller caps, you can probably get away with that. But just remember that you would be ignoring this indicator if you did that. All right, let's go back to our daily charts and move on to global ETFs. So this is the all-world index, and you can see we've come right up to the top of the range, and we are pausing right here. Pausing at the top of the range is just fine. That's what sets us up to break through. But, it's the top of a range because we've been unable to break through it. So right now, this looks like a bit of a coin flip on where this is going to go. Not a lot of clues here. There's just no clues. So we'll have to wait and see on this one. EFA, Europe, developed Far East, and Australia. This is looking nice. Nice strong uptrend. Broke through this pivot here, broke out to a, I'm not sure if this is all-time, I don't know, this is not all-time high, this is a one-year high, though this is recently broken out to, or broke out to on Friday. And so I think we can expect to see this go higher. If this does go higher, then maybe that's what takes or drags that ACWI index along with it. Emerging markets, ex-China. This isn't as strong, but still looking all right here, You can see we take a little leg up, little pause, little leg up, little pause, little leg up. Maybe we're in that pause bit. Next leg up probably takes us up into the top of the range and around here. So be nice to see get there or maybe pause. And FXI, China large cap. These have been a little weak, but you can see holding the trend line, but just barely here. Unfortunately, below a support resistance area. This really needs to get up and go here. If this breaks down through this trend line, I fear that we might be coming down to the test this level way down here. All right, let's move on to our commodities, and we'll start with gold. Gold had a big breakdown on Friday. You can see this great big bearish engulfing candle. This is not ideal for sure. Gold's had a nice move. It's not surprising to see it take a rest. And you can see that we do occasionally have these big red candles. You can see one right here. We had an indecisive candle at the end of a leg up. Big red candle. Well, it managed to turn itself around and eventually move its way up again. So don't count gold out here, but it's not looking good. If you get another big red candle like this tomorrow, then people will kind of freak out and start selling, and it wouldn't surprise me one bit if we see gold within a couple of days back down to this 1920 major support area. GDX, the gold miners, they fared a little better on Friday, and you can see actually closed with a hammer candle. Hammer candle, in an uptrend, not terribly meaningful. Not like it would be at the bottom of a downtrend, but still looking stronger than gold and suggesting maybe that that pullback in gold is temporary. Silver futures also had a really big, ugly bearish engulfing candle. Same applies here as for gold. If we get another, if we start drawing another big red candle, we could see a big move back, and I wouldn't be surprised to see silver come all the way back to 23.50. Okay, and copper. So copper fared better than the other metals, or than gold and silver anyway, on Friday, but it still had a little bit of a shooting star candle here as it tried to break out of a bit of a range or through some minor resistance. No big deal, though, I don't think. We, still in a nice long-term uptrend in copper, so we should, over the longer term, expect this to continue higher. Let's take a look at oil. So oil had a nice move up earlier in the week, a couple of good days, moved right up into the 200-day moving average. Looked like it was going to get through this resistance zone and hold above it. But it started to chop around. Now, I mean, so far this is just a bull flag, but it's a little bit scary that it's under the 200-day moving average, and that it really didn't move that far. And you know, we are in this zone of major resistance. So combine that with what we'll see in some of the ETFs, and it's getting a little bit difficult to be bullish on oil right now. Natural gas is at the bottom of its downtrend, chopping around, going sideways, building a base. However, we've seen natural gas build a base before. You can see a couple of times here where it did some base building exercises and completely failed on those. I'm expecting to see failure of this one as well. XLE, the energy ETF, trying to grind higher here. Indecisive doji candle on Friday, right under resistance. Not expecting much more out of here. Actually, kind of expecting this to roll over a little bit. XOP, the oil producers. This one's drawing a little bit of a bull flag. I mean, this is a nice looking consolidation here. It is right under two long-term moving averages, though, right under the 100 and the 200-day moving average. Now, if you're aggressive and you're really bullish on oil, a breakout out of this, if oil is moving up, could be a nice little play. Not for me, though. Let's see. OIH, Oil Services ETF. And again, you can see, look at these little, wicky little small candles here, not looking especially healthy, looking almost like it wants to roll over here. Okay, how about TAN? TAN continues to chop, but it is starting to really kind of consolidate inside this triangle. You can see the moving averages are flattening out. They're just getting wrapped all over price. For an ETF that is usually fairly volatile, the action is starting to tighten up here. And from compression comes expansion. So this may be worth keeping an eye on for a big move, probably coming soon. Although it could be, I mean, this could just go sideways for another couple of weeks. So the move is not necessarily imminent here, but this does lead to or should make us think that we are going to see a fairly aggressive move out of this shortly. Okay, let's look at our major sectors. We'll start with consumer discretionary, and we can see that this is still in a short-term uptrend. It's doing fine. Had a better day on Friday than a lot of sectors did. Coming in a little bit of resistance, though. XLI Industrials. These spent most of the week chopping around under resistance, under 100-day and 50-day moving average. Kind of expect more sideways out of this. XLF Financials. Now these did exactly what we needed to see. Maybe not exactly what we needed to see, but they broke out of this basing pattern. On Friday morning, we had kicked off earnings season with a bunch of big banks, and their earnings, the big bank earnings, were good. That gave us this nice gap up. But it left us with this indecisive doji. Now this is one of the strongest sectors on Friday. Or was it, if not the strongest? Hang on, sorry, one sec here. Yes, definitely by far. Strongest sector on Friday. Would have been nice to see this close closer to its highs, but still looking okay. What might be interesting here is to see a little bit of a pullback, close the gap, and then go. I think that would be really healthy and strong. If we leave this gap open, I think too many people are just going to want to see that gap closed. So maybe we do over the next day or two, get a little pullback, close the gap, and then roll back up again. KRE, the regional banks. So, big bank earnings were very briefly helpful on this. However, you can see that after gapping up on Friday, they just pulled right back, closed that gap, and went right back into this consolidation zone. That is just, it just hasn't been able to break out of this. And it really needs to. It's got to break out of here and hold, because if it doesn't, it means that we break down below this important support, really important support. And we do not want to see these things breaking down. even though they're smaller banks, that would just not be good for the overall market. Okay, XLV Healthcare. Nice. Healthcare was really strong on Thursday. Gave most of it back on Friday, unfortunately. But, look at this move here. It's allowed to take a bit of a rest. And as long as it holds above this resistance level, I'm fine with it resting as long as it wants to. XBI, Biotech. And you can see that this had a really good day on Thursday too. Went from one end of the range all the way to the other. If you're the kind of player, aggressive mean reversion kind of player, you would have been buying the bottom of that red candle on Wednesday, and you would have been really happy with Thursday's price action. Yeah, interesting moves going on here in biotech. XLRE REITs, nothing exciting really to see here. We probably will see a little bit more. Now, in REITs there's an awful lot of commercial real estate, so all the housing data coming this week will have an effect on this ETF, but probably not a ton of effect. All right, let's look at XLP Staples. You can see this is just consolidating sideways a little bit here, much like the markets. XLU Utilities. This one is sort of consolidating, a little bit of a wider, messier consolidation, but consolidating nonetheless. XLK Technology. Okay, nice tight consolidation here. We've had a nice leg up, pulled back a tiny bit, and now we're going sideways. Kind of a bull flag. I think this is quite healthy action. We're above the 21-day moving average. Kind of actually squeezing right now between the 10-day moving average and the 21. I think this consolidation is just building strength for a move higher. I fully expect this to move higher. I expect this to get through this 152 pivot quite easily, and grind our way or however it gets there. Next leg up, next area of resistance 164 on that. XLC Communication Sector. Okay, you can see we've got this nice little upward channel. I mean, if this is a bear flag, this would not be ideal. Rising or ascending bear flags like that tend to fail. But because I'm mostly bullish on the market, I would not be surprised if this just grinds higher. We do have to watch out for some of these resistance levels just overhead, though. We've got this pivot here and this pivot here going back to August of last year. Semiconductors, I mentioned these earlier with a bunch of earnings coming up in this space. Now, still on a short-term uptrend, or almost intermediate-term uptrend now. Right on this 50-day moving average, that's been holding it up nicely. But you can see that the 10-day moving averages started to roll over. The 21-day is flattened out. This is just consolidating. So like I said earlier, really not participating in that, some or a good chunk of the tech rally it hasn't been participating in. But it is still in an upward channel. So we've got to see some good earnings come in this week so that it continues in this upward channel. Otherwise, I think we come down and we start testing some of these lows in this support level down here. All right, let's move into our FAANG stocks, and we'll start with Meta. This grinds higher on Wednesday, the midweek briefing. Talked about this consolidation here, and there could be a nice little play out of that consolidation. Sure enough, there was the very next day. Gapped up and kept going up. Friday, gapped down just a tiny bit, but recovered nicely and closed on the highs. Meta's strong here, and it's the kind of stock where if it gives you a little place to get in, if it gives you an opening, you kind of want to take it. Apple. I like the way Apple is setting up here. So I had a bit of a scary pullback, right? Then that nice day on Thursday, a little bit pullback here on Friday. But indecisive doji right under that pivot there, but it's sitting right on top of its 10-day moving average. Basically it's well above all the moving averages. This little sideways action, even though it's a little bit messy, it's a little wide. This is healthy. It just gives time for all these other moving averages to catch up to price. I fully expect to see Apple break out of here and move up to the next level. This gap could be an issue for a day or two, but I wouldn't be surprised, within the next week and a half, to see Apple up here at 176 testing that pivot. Amazon. This is one that I am less convinced about. It is just chopping sideways in here. It can't really get anything going. It's not, it doesn't look bad, but it doesn't really look that great either. So Amazon's hands off for me for now. Netflix, remember these guys have earnings coming up on, was it Tuesday after the close? So watch out for that. I think we just got a little bit more sideways here in this range until earnings. And earnings are going to break it out of this range one way or the other. Earnings are such a binary event, and this is, this is a very binary kind of range here. So expect big moves coming for Netflix this week. Google. All right. Google not looking too bad here. Trying to break out of this resistance zone that it's been in. It's right at the top of it. And especially, considering this was definitely outperforming the market on Friday, I would expect to see this to continue and us, eventually move up to the next level here, up and around 118. But I think it's time for this to finally break through this 108 level. Okay, Microsoft. So some nice base building consolidation going on here. You can see that this is build spaces and then steps up to the next level. Building a base going sideways right here for a couple of weeks, just below some what is becoming fairly major resistance level here. An old gap that goes way back into last year, or almost a year now. No, sorry, well over a year. Exactly a year. That gap looks like it's going to be closed this week, I think. Okay, Tesla. Earnings Wednesday after the close. Probably goes sideways until after the close on Wednesday, when it will most likely make a big move one way or the other. So we'll all be watching that, of course. All right, let's move on to some of our plays that we like to keep an eye on. HIMS. Now, you can see we've had now a month in this consolidation. We are, kind of going right back and forth across the 10 and 21-day moving average. You can see the other day, earlier in the week, the 50-day moving average supported again and price moved away from it. I think this is getting really close to being ready to move up. Now watch that healthcare sector. If that healthcare sector starts to go, this should go with it. And so the next leg up obviously closes the gap, and that takes us very near all-time highs. So I think that we're getting close to seeing some action here out of HIMS. I don't know when they've got earnings. Oh, the earnings won't be till middle of May, over a month away. And remember, of course, we're getting into earnings season now. I'm not always going to mention when these things have earnings, when we're looking at some of these individual names. Generally, I have checked for earnings when we're looking at plays, but occasionally, unfortunately, miss some. All right, let's look at ALDX as one of the plays from last weekend as well. This did break out nicely as we expected, but man, did it ever get choppy afterwards. So, if you played this, if you were really aggressive, you would have got out. You would have seen some questionable price action on the day after that breakout, and certainly the day after that. And that's the area I got out in. But look at this nasty candle here. So yeah, this was a tough play. Sorry about that, guys. Try and find the easy ones, but they can't all be easy, right? So if you manage to withstand all of this, A, how did you do it? Let me know. And B, congrats, I guess. This looks like it's going to move up, but I don't want to have anything to do with this stock now. I really did not like any of that price action after I got in it there, even though I did make some money on it. But it was not a pretty ride. AQN Algonquin. I did not go in this one. But you can see it did break out as we expected. It was just, really, really slow mover. And being a utility, we knew it was going to be a slow mover. But this is not much movement at all. And then you can see it's pulled right back now, right back to the breakout level, right on that 10-day moving average. We would expect to see that support. If that doesn't support, I think we probably break this trend line here as well. So if you are in this one, and you break down in here, I don't know if you want to still be holding it or not. Okay, and Red Robin. This one was pretty cool at first. So really nice breakout, and I got in here really early on Monday with this breakout, and it was a beautiful easy ride on Monday, an easy ride on Tuesday, and then it got ugly on Wednesday, and I bailed on it. You could just tell from the price action. It's like, no, get out of here right now. And that big ugly red candle. We found support, though, on Friday, and it outperformed the market on Friday, and found support right at the bottom of the flag and at the 10-day moving average. So kind of not bad, and so maybe this sets up again for another breakout here out of this sort of bull flag. Now, there's not much of a flagpole here on this, unfortunately, but it kind of looks like what's setting up. So that might be worth keeping an eye on. Okay, let's move into our new setups because these ones look better than still watching any of those we just looked at. This is Builders First. And remember I mentioned that we've got lots of lots of housing data coming this week. And I was noticing that a lot of the home builders are kind of setting up with nice patterns. A lot of the home builders look ready to kind of break out. These guys are not a home builder. These are the supplier. This is the a wholesale supplier to home builders. So this is sort of the pick and axes play for the housing market and the home builders. And I just really like the way this is set up. As you can see, we look down to the bottom pane here. We have been strongly outperforming the S&P 500 ever since late last year. Nice strong uptrend here. We've come down to the 50-day moving average once since back in December. It makes nice little moves up, consolidates, move up, consolidate. And that's kind of what we're seeing here, right? After the last move up, it pulled back a little bit. We had a couple of 3 days of nice move up. Now we're consolidating again, drawing so far a nice tight little bull flag. This is a pretty easy play for me. Obviously, you just buy the breakout with a stop just below. And I think that will do nicely. Oh, I also wanted to show you a relative chart on this, relative strength chart. This is compared to the home builders, okay? So at the top, we have Builders First. In the middle, we have XHB, the home builders ETF. You can see this has kind of been going sideways, but just in the last week or so, we've seen a little bit of a turn up here. And down at the bottom, we see the relative strength of Builders First to XHB, the Home Builders ETF. And you can see that this has been really strongly outperforming the Home Builders ETF. So that's why I've picked that over any of the individual home builder companies for a play here, just because of its relative strength. Now, if this housing data that we're seeing coming this week comes in weak, this play is off the table. If we see strength out of that housing data and we see strength out of the home builders themselves, that home building index, HHB, we should also be seeing strength here in BLDR and be jumping into this. However, as always, this is not investment advice. You trade at your own risk. I'm just letting you know what I intend to do. Okay, let's look at our next one. This is RACE, R-A-C-E. This is Ferrari. Fun little company here. Look at the strength in this one. Really strong outperformance on the S&P 500 since the middle of September. Strong uptrend that started the middle of October and very much intact. Had a bit of a consolidation lately. Built a pretty decent base in here for a couple of months. Broke out of that last week. Now, we are a little late here. obviously. The reason this is so gappy is because this is a European company. You know, a lot of the catalysts for this will, you know, be priced into the market before U.S. markets open, and so then you open with a gap. Now, what I'd like to see here, because we are late on this, and the only way I'm going to play this, I want to just zoom right in here. I'd like to see a little pullback, and you can see that we've got some doji-ish candles, a little bit indecision here, you know, chopping around through the day. What I'd like to see is a bit of a pullback here. Either we pull back down to the low of Thursday, perhaps we come down and close this gap. I think this is actually best case scenarios. It comes down and closes this gap, so the bottom of this red zone, and then starts to turn up. I would buy that on the turn up. Maybe if it came all the way down and closed the gap, maybe you want to wait until it goes back above the low of Thursday and then buy the breakout of that. So still some work to do on this one. I'm really not comfortable just chasing this, but I also kind of think it might give us an opportunity to get in. So yeah, we'll see about this. You know, if it works out for us, if we get that pullback, awesome. If not, oh well, we missed it. There's plenty of other opportunities. All right, let's look at ARLO Technologies. This is electronic equipment and instruments. I really know nothing about this company other than that, and that it has been outperforming the S&P 500 recently until it started to consolidate here for the last week. But this is a nice tight consolidation. And I would expect to see this break to the upside, and if it does so, look how well this is risk defined, right? Again, this should be a pretty easy trade. Buy the breakout, put the stop below, move the stop up as quickly as you can. AMPX. This is electrical components. Again, look at this. This is a pretty obvious setup here. One of the things I really like about this, okay, look at this line here. You know, where we've come up, we came up to there, we pulled back, we come up, now we're consolidating under it. We're in a very short-term uptrend here. Moving average is all below price. But this purple line here, that is the IPO open. And for that reason, I think when it breaks through here, it will be a strong move out of there. I think, what are we at? That line's at $9. I think this could quite easily move in one fell swoop up to 11. We are going to find some resistance up in there, and you can see there's a big volume node up in that area too. Yeah, be quick. Keep an eye on this. Get an alert on this thing, because if this breaks out through here, like I said, I think fast move. So that should be quite interesting. And you know, conversely, because this looks like such an obvious setup to the upside, if we get a breakdown here, you could also see a fast move to the downside. However, that's a more difficult play, I think, because we've got a bunch of moving averages down here, you know, to catch it and act as support. Right, what's the next one? That was AMPX. Let's look at BlackBerry, the last one. This is probably my least favorite of all of these, but you can see nice tight bull flag. Oh, we got to back up on this one because part of that bull flag is the downtrend line. You can see the downtrend here that started after that consolidation back in November of 2021. So obviously the stock was in a major downtrend. However, we recently put in a higher low, and we tried to put in a higher high and just failed to put in that higher high. So now you could call this a cup and handle, right? Do you see that here? Let me draw that in for you guys. Here is our cup. I made that a little messy. And then obviously, whoops. Obviously, we've got the handle right here. Could be a nice move out of here, but we need to be aware. We've got the 200-day moving average right overhead. We've got some resistance not too far above that. So what are we at here? Our breakout on this is going to be around 450. Yeah, when we get up to about 530, so we've got about 80 cents into that before we get in another potential resistance area where we would not be surprised to see that consolidate. So like I said, very spec on this one. Not my favorite play, but if the market's rallying and strong, you can take these plays that are maybe second tier kind of plays. This is not the kind of play, though, you want to take if the market's being weak. And that's it. That's all our plays. Let's go back over here. Take a look at what we got coming up. So this is our calendar for members. No live sessions coming up this week, but on Wednesday, as I do every Wednesday, we'll be doing a midweek briefing, and that will be posted on YouTube as well. And yeah, that's everything I got for you guys. Thank you so much for watching. Hit that like button, share and subscribe, and enjoy the rest of your weekend, and have an excellent weekend or week ahead. I think this could be a fun week for us. Good night, everybody.